Let's talk about the quarter that went by, and that was a very good one for ICICI Lombard. A decent set of numbers coming in, the stock doing extremely well. We now have with us Gopal Balachandran, who is the Chief Financial Officer at ICICI Lombard General Insurance Company. Thanks a lot, Gopal, for joining in. The street likes what you've reported, but the street wants a little more. You know, on your gross written premium, which has grown about 1.6% in the second quarter, net earned premium, which has grown about 12.5% in the second quarter. What are your expectations for these over the second half? And even the combined ratio, if you could give us a sense on what the expectations here are or your target here is.
Yes, Mangam, good morning to you. And let me start on a positive note. Let me extend a season's greetings to you, entire team.
You and your team too.
CNBC and all your viewers. But coming back, I think let me take the second part first in terms of the combined ratio point that you asked. And let me put this in context. I think if you look at the combined ratio that we reported for quarter two, again, I'm just looking at it on a like-to-like basis for ease of reference. The quarter two of this year, the combined ratio was about 103.9% on an N basis. This number in quarter two of last year was about 104.5. So directionally, I think what we have been able to exhibit is an improvement in combined at a company level. And therefore, the trajectory that one expects is also to continue to see improvement in combined playing out for ICICI Lombard. But obviously, we will see how the industry kind of responds in terms of combined. And our combined will kind of, in that sense, mirror relative to that. To your first point on how do we see growth getting exhibited, I think the momentum on ground looks very, very positive. The point that you made in terms of, let's say, a relatively kind of a muted growth that one had seen for the first half of this year. But if you were to kind of break it down in the context of the quarter two, and within that specifically, the momentum that ICICI Lombard is riding on in the month of September, across lines, whether it's commercial, motor, retail health, each of these are preferred segments for us. The momentum on ground looks to be very, very positively placed, and therefore, to that extent, quite excited with how does one see the road ahead, particularly for the second half of the next year.
Could you put a number to that?
Honestly, I think what we have called out is, I think, relative to the market. I think what we would be kind of looking for is to try and see if we can get an alpha or a growth higher in the range of 100 to 200 basis points. I think that's what we would kind of largely be kind of working towards. But more importantly, obviously kind of staying focused on delivering profitable growth and sustainable return on equity.
All right. Good morning, sir, and festive greetings to you as well as to the team. Nigel on this side. Could you tell us what is the industry growth that you're working with, since you're working with that 100 to around 200 basis points higher growth? And if you could particularly tell us in motor as well as health, what kind of growth estimates for the second half?
Yeah, so Nigel, again, good morning to you. I think, so again, when you look at the industry numbers for the first half of the year, I think it has been a single-digit number, roughly about 7% growth is what the market has exhibited. And even the momentum that I spoke about in terms of whether it's motor, whether it's retail health, I think in general, I think the momentum on ground is playing positive even from a market perspective. And therefore, there is clear expectations that the market also should start exhibiting a growth number much higher than, let's say, possibly the 7% number that it had exhibited in the first half of the year. And which is where I kind of talked about. In that context is where we would look at it from an ICICI Lombard standpoint. I think what we will try for and what we're kind of clearly working towards, you should try and get that alpha of about 100 to 200 basis points over the industry growth numbers.
You said the industry will grow faster than the 7% mark in the second half. How much faster can that grow? You think it could be about 8 to 9%? And
I think we will leave it for the market to kind of come out with the
all right. So irrespective, you will grow between 9 to 12%, because if the industry grows at 7%, 100, 200 basis points would be 9% for you. If it grows at 9%, you will grow at around 100, 200 basis points higher than that. So 9 to 12% would be a reasonable estimate, right?
So what we are optimistic about is what I kind of talked about. I think across lines, I think the momentum on ground is looking very, very positive. Final outcomes of what does the exact numbers, I think honestly, we will come back and speak in the channel.
Okay, all right. Let's talk about the other big aspect that the street is looking at. Are you still hopeful of receiving of the motor third-party premium revision for this year? Or according to you, maybe it comes only the next year? What's the expectation on that front? And where are discussions? Because that was the big hope, right?
Yeah, so again, in context, I think third party has been one segment where relatively for the last 3-4 years, there has not been in that sense a price revision. But however, when one has seen from an industry standpoint, the average claim awards that is getting affected in the form of claims, that has definitely seen an increase, which is why from an industry standpoint, I think what we have been collectively kind of seeking is a price revision in the context of third party. We will wait for how it gets played out, whether it gets announced in the second half of the year or whether it gets kind of announced for FY 26-27. I think we'll wait for. I think, but clearly from an industry standpoint, when we looked at in terms of how things have played out relative to the last 3-4 years of no meaningful price change, there is a very strong reason that as an industry that we want to exhibit in terms of a revision in third party. But when it happens, I think honestly, we will wait for the exact time.
Got it. So you think that the time is right, but it could be either the second half of this year or sometime next year as well. Let's talk about the other big imponderable, the GST. There was a fair amount of uncertainty out there with regards to the additional cost that could be on account of the inverted duty benefits, no ITC coming in for you. And have you decided to transfer the cost to distributors or not? We wanted to know a little about that as well. And, just try to give us a sense on what the impact could be on an overall basis, because lower rates could mean higher number of people opting for, insurance as well. So how is that cost benefit analysis for you?
Exactly, Mangalam, exactly to what you kind of said. I think what these reforms have done is kind of spurred demand on ground. Whether you look at across health or whether you look at, for the matter of fact, auto vehicle sales that has got exhibited in terms of the recent numbers that got reflected. So which is what we are very, very excited with. I think there is a lot of positive momentum which could translate into increased volumes of sales across most of the key retail lines, which kind of clearly augurs well when you look at it in the context of the distributors' incentives or distributions commissions. And from an ICICI Lombard standpoint, I think clearly we would make sure that whatever reforms have kind of got exhibited, that gets completely passed on insofar as the customers are concerned. And insofar as the impact consequent to any of the input tax credit, etc., I think that's a part of the business. And therefore, to that extent, whatever numbers that we reflect in terms of our expenses of management, they will be all a part of that. And to that extent, if there is some element of distribution cost that has to be kind of also passed back to some of the distributors, I think that is something that we have already kind of exhibited. But just to kind of say that, I think what we are more excited with is the positive momentum that is kind of getting created, and which will kind of spur a lot more volume increase, and therefore to that extent the eventual revenues that will be seen in the hands of the distributors will equally be very, very positive.
So basically, if you could just simplify this for everyone who's watching, how much would the increase in cost be? And so far in the new GST regime, how much has the increased volumes been on account of the GST reduction? You've said there has been momentum. So over and above steady state, how much more have you received, which you can attribute to a lower GST?
So let's take the auto vehicle sales, right? Okay. From a Navratri to Navratri standpoint, whether you take private car or whether you take two-wheelers, I think what we have seen in the market is an increased volume to the tune of almost about 35% plus. So this is a significant kind of a jump, which is what one was kind of talking about. And therefore, to that extent, this kind of augurs well in terms of a higher incentives when you look at it even from a distributor standpoint. On the point on the input tax credit, that is more relevant in the context of health, which is what one had said. I think in the overall scheme of things, I think this amount is something that one will be able to kind of manage within the overall cost structures that we have, including some impacts if we have to take. To that extent, we will be taking that impact, and to the extent which is required to be passed back also to the distributors. That is something that we have again already announced on a case-to-case basis with the respective distributors.
Okay, all right. Well, sir, we appreciate you joining in. Thanks a lot for giving us that outlook as well. For the time being, the street seems to have liked what you said. And, I've had a favorable experience as well with the company in the last 1 year or so. So thanks a lot. And shareholders as well like what they see, Mangalam.